We've seen global bond yields rise to fresh record highs since the Middle East conflict started between the US and Iran back in February. To us, we think this move higher in bond yields reflects building market concerns over the economic fallout from the energy price shock. The longer we go on without a deal between the US and Iran to end the conflict, and importantly, to reopen the Strait of Hormuz, the greater the risk of a more disruptive, stagflationary outcome for the global economy. And all of this is forcing a rethink of the outlook for central bank policy going forward. Markets have moved to price in more aggressive rate hikes from major central banks, including from the Federal Reserve in the US. And if we continue to see this move higher for global bond yields, eventually we think this will then start to challenge buoyant global investor risk sentiment, and then that could spill over into providing more support for the US dollar. Well, we've seen that here in the UK, where the sell-off in the gilt market has been much bigger than what we've seen in other major bond markets, and that has started to spill over into pound weakness over the past week. To us, this reflects a number of factors. Firstly, market participants are more concerned that inflation in the UK will prove more persistent, and that's putting upward pressure on longer-term bond yields. And then secondly, we've also seen political risks return to the fore here in the UK over the last couple of weeks. Prime Minister Keir Starmer's position is looking increasingly fragile. And while he isn't yet facing a formal leadership challenge, it does look like support from Labour MPs is quickly slipping away. Andy Burnham, meanwhile, is the frontrunner amongst Labour Party members to become the next Prime Minister. But he currently doesn't have a seat as an MP, so he will have to contest a by-election. And unfortunately for him, he faces strong opposition from the Reform Party. So it is by no means a done deal that he will win and will be able to challenge Keir Starmer. For markets, we think this is important in that the period of heightened political uncertainty and then the potential for the Labour Party to shift more towards the left under a new leader could create a more unfavourable backdrop for UK assets going forward. But as we've seen over the last 24 hours, the sell-off in the gilt market does have the power to change politicians' policies. And Andy Burnham has come out and stated clearly that he plans to maintain the government's current fiscal rules. And if he does stick to those rules, they will help to bind and to reduce his room to loosen fiscal policy, which for us would then help to reduce downside risks for the pound and gilts going forward.